Following the introduction from the accountants, and we also work closely with professional intermediaries such as accountants, law firms, where we assist the accountancy firm, for example, in servicing their clients' tax needs. The accountancy firm effectively introduced them to us. And the starting point for me especially is the initial discussions. So it's never a blanket approach where, we see husband and wife landlord and we just say, okay, we need to incorporate. We'll come to the incorporation bit very shortly, but it should never just be, okay, let's incorporate, or my friend incorporated and therefore I should be incorporating too. It doesn't work like that. It's very important that every individual and family circumstance is analyzed and assessed on a case-by-case basis. So that's how we start. So effectively, we have a fact-finding Excel document, and that's where we obtain the initial information. And from there, we get on a call and we understood for this particular client, I was on the call and I particularly understood the affairs of the clients. Okay, when I say the affairs, I mean, okay, what are your long-term plans? That's always like an initial question, which is, okay, you're here right now. Where do you intend to get to? As in, what are your plans? What objectives are you trying to achieve? And I think a lot of that information effectively drives the tax planning. It shouldn't be the other way where, as in yes, everybody wants to save tax, right? So that is a key driver. But what I'm saying is it should be in line with the wider objectives, because then we can throw out 50 solutions, okay? And the solution might save you tax, but you lose control, for example. Okay, so there are a lot of different angles that need to be analyzed and assessed. Following from there, we undertook an initial tax analysis. So what can be done, what can't be done, as well as comparative calculations. So effectively what we're saying is, okay, if you go down option 1 or route 1, then these are the advantages, the benefits, these are the drawbacks. This is your current tax position. This is your end tax position, after 1 year, 10 years, 15 years. That's route 1. Route 2, route 3. So it's options that we're providing to the client. Sometimes there might just be 1 or 2 options. Sometimes there might be 4 or 5. Okay, it's again very driven to the client's needs and objectives. Very quickly, we realized, following comparative calculations, that there were large tax savings to be made, very significant tax savings. We're looking at in the region of